Hello, I'm Brooke Thackray, Research Analyst with Global X. After gold gained 13% in 2023, it is hitting all-time highs in 2024. Will this trend continue? In this video, we'll answer 3 questions that will help explain what's driving the price of gold and look at ways to invest in the precious metals commodity. There are multiple different drivers of the price of gold, including inflation, real interest rates, the US dollar, geopolitical risks, and financial stability risks. Inflation erodes the spending power of the dollar. Hard assets, such as gold, tend to appreciate during periods of high inflation. During COVID-19, the US government and the Federal Reserve combined to rapidly increase the existing money supply, producing high inflation and, as a consequence, reducing the value of US dollars. This helped to support a higher gold price. Low real interest rates tends to support a higher gold price. Real interest rates are defined as nominal interest rates minus inflation or expected inflation. Real interest rates are generally inversely correlated to the price of gold. Typically, high interest rates means a large opportunity cost to hold gold as it does not pay interest or dividends. Low interest rates reduces the opportunity cost and helps to support a higher gold price. Since 2022, the gold price and real interest rates relationship has been broken, as real interest rates have been climbing and at the same time gold has been rising. This is partly due to investors expecting the Federal Reserve to cut interest rates in 2024, which would decrease the real yield and help support a higher gold price. The strength of the US dollar tends to affect the price of gold, as they have an inverse relationship. A weak US dollar tends to support a higher gold price. A strong US dollar tends to support a weaker gold price. However, gold is priced in US dollars. When the US dollar weakens in value relative to world currencies, gold becomes relatively cheaper. When the US dollar strengthens in value, gold becomes relatively more expensive. Geopolitical uncertainty increases the demand for safe haven assets, such as gold. Investors are attracted to assets, including gold, that have traditionally held their value in uncertain times. Recently, there has been increased geopolitical uncertainty, including the Russia-Ukraine war and the conflict in the Middle East, both of which are helping to support a higher gold price. Financial uncertainty increases the demand for assets, such as gold, that generally will not lose their value if large amounts of money are printed to keep the financial system operating. In a TV interview in early 2024, Federal Reserve Chair Jerome Powell said that the U.S. is currently on an unsustainable fiscal path in the long term. Some central banks and investors are buying gold to hedge against any possibility of long-term financial instability. Non-Western central banks have been buying large amounts of gold, according to the World Gold Council. Will this trend continue? An increasing number of central banks are looking for an alternative to the US dollar for settlement purposes and as a means to store wealth. Central banks have maintained large purchases of gold in 2023, even as the price was rising. There is no indication that central banks will change their buying behavior. There are different ways to invest to potentially benefit from the movement in the price of gold. Investors can buy physical gold, invest in individual mining stocks, or they can consider a gold-themed investment vehicle like an exchange-traded fund or an ETF for short. Investing in an ETF can offer the benefit of being more diversified than in holding individual stocks and helping to reduce the risk associated with investing in just 1 or 2 companies. Global X has a broad offering of many ETFs. It offers 2 different ETFs that can help investors capture opportunities from the fluctuating price of gold. One of the gold-focused ETFs is the Global X Gold ETF, which tracks the price movement of gold bullion. Its ticker symbol is HUG. The second gold ETF invests in gold mining companies and uses a covered call strategy to help produce income. If you are interested in investing in companies mining gold rather than the commodity itself, consider the Global X Gold Producer Equity Covered Call ETF, which offers a covered call approach to investing in gold producers. The ticker symbol for this ETF is GLCC. For more information on Global X's gold ETFs, please visit the Global X website. I'm Brooke Thackray with Global X. Thank you for watching.